U.S. Treasury bonds, often referred to as T-bonds, are long-term debt securities issued by the U.S. Department of the Treasury. These bonds are a cornerstone of global finance due to their stability and reliability. Considered one of the safest investments available, T-bonds attract investors from all over the world, including governments, institutions, and individuals. In this video, we will explore the top 10 ways U.S. Treasury bonds are used in global finance and how they play a key role in both domestic and international markets. 1. Safe haven for investors. U.S. Treasury bonds are often referred to as a safe haven investment, particularly in times of economic uncertainty or market volatility. During global financial crises or periods of geopolitical instability, investors flock to T-bonds because they are backed by the U.S. government, making them virtually risk-free. The low risk associated with these bonds provides a sense of security to investors seeking to protect their capital. 2. Benchmark for interest rates. Treasury bonds serve as a benchmark for interest rates in global finance. Since they are considered low risk, the yields on T-bonds are often used as a reference point for setting interest rates on other types of debt, such as corporate bonds and mortgages. The difference between the yield on Treasury bonds and other bonds is known as the spread. Financial markets closely monitor changes in T-bond yields, as they indicate shifts in economic conditions and interest rate expectations. 3. Reserve assets for central banks. Central banks around the world hold large amounts of U.S. Treasury bonds as part of their foreign exchange reserves. These bonds are considered highly liquid and stable, making them an ideal asset for central banks to hold in their reserves. Countries like China, Japan, and the European Union hold U.S. Treasury bonds to diversify their portfolios and ensure liquidity in times of economic stress. The use of T-bonds as reserve assets also helps maintain the value of a nation's currency by stabilizing exchange rates. 4. Currency stabilization. Many countries hold U.S. Treasury bonds to stabilize their currencies in international markets. For example, some nations buy Treasury bonds to accumulate U.S. dollars, which they can then use to support the value of their own currency. This practice is particularly common in emerging markets where central banks need to maintain the stability of their currencies against the U.S. dollar, which is the global reserve currency. 5. Collateral for loans and transactions. U.S. Treasury bonds are frequently used as collateral in financial transactions and lending arrangements. Financial institutions, such as banks and hedge funds, often use T-bonds as collateral for short-term loans, repurchase agreements, repos, and other types of transactions. The high liquidity and security of Treasury bonds make them an ideal form of collateral, ensuring that the loan or transaction is backed by a low-risk asset. 6. Investment for pension funds and insurance companies. Pension funds, insurance companies, and other institutional investors often invest in U.S. Treasury bonds to generate stable, long-term returns. These investors value the predictable cash flows from T-bonds, which are paid semi-annually and provide a fixed income stream over the life of the bond. The stability of U.S. Treasury bonds makes them an attractive option for institutions that need to match long-term liabilities, such as future pension payouts or insurance claims. 7. Indicator of U.S. government debt levels. U.S. Treasury bonds are a key indicator of the level of debt the U.S. government carries. When the government issues bonds, it is essentially borrowing money from investors to fund its operations, including military spending, social programs, and infrastructure. The total amount of Treasury bonds outstanding provides insight into the scale of the U.S. national debt. Investors and policymakers closely monitor these figures, as rising debt levels can influence interest rates, fiscal policy, and the broader economy. 8. Foreign investment in the U.S. Foreign governments and private investors often purchase U.S. Treasury bonds as a way to invest in the U.S. economy. For many countries, buying Treasury bonds is a way to diversify their investment portfolios and take advantage of the relatively stable returns these bonds offer. Additionally, purchasing U.S. Treasury bonds can serve as a strategic move for foreign governments looking to maintain strong diplomatic and economic ties with the U.S. and gain access to American markets. 9. Capital for sovereign wealth funds. Sovereign wealth funds, SWFs, government-owned investment funds, often hold substantial amounts of U.S. Treasury bonds. These funds are typically set up by countries with significant revenues from natural resources, such as oil, or from trade surpluses. SWFs use T-bonds as a way to preserve and grow national wealth while minimizing risk. Holding Treasury bonds allows these funds to generate returns while maintaining a conservative investment strategy. 10. Facilitation of global trade. U.S. Treasury bonds also play an essential role in facilitating global trade. Since the U.S. dollar is the world's primary reserve currency, many countries and businesses use Treasury bonds to settle international transactions and trade. The liquidity and stability of Treasury bonds make them an ideal vehicle for holding U.S. dollars in foreign trade agreements, ensuring that payments are made with a trusted, stable asset. U.S. Treasury bonds are a crucial element of global finance, serving multiple roles that extend far beyond the U.S. borders. From providing a safe haven for investors to stabilizing currencies and supporting sovereign wealth funds, T-bonds are deeply integrated into financial markets worldwide. Their stability, liquidity, and reliability make them an attractive asset for central banks, institutional investors, and foreign governments. As the global economy continues to evolve, the importance of U.S. Treasury bonds in maintaining financial stability and supporting international trade will only grow.